Today we're breaking down housing grants, the good, the bad, and the ugly. So the VA allows military members to purchase a home and utilize their VA home loan with a Homebuyer Assistance Program, also known as HAP. In essence, it's for closing costs and down payment assistance that you can benefit from to reduce the overall cost of being a homeowner. Now, these are offered by a variety of agencies, from government to also private entities, which I think is pretty interesting. You also have banks that will offer these, and they range from being on a national scale on a state-specific, county, and city-specific programs, even within certain geographical locations within an area, even based on like property address. Some will qualify for some additional programs when others do not. And that's why it's so important to understand how these programs work, and just kind of, full disclosure, I really don't recommend a lot of times people getting these because they come with a lot of restrictions that people do not understand. I would say 9 out of 10 people, once we go through the program, they're like, you know what, that program is not for me. I don't even want to take that additional money because of the restrictions that happen in that. Because the reality is nothing is free in life, right? People just giving money away for free, even if it's the government, and these types of programs are going to have some type of restriction. But again, there's plenty of people that it's positive for, and that's what we're going to talk about today, just walking through the benefits and restrictions of that. And we're also going to talk how to find the programs as well. So I'm going to give you guys a demo of that. And the reason why I do videos like this, especially around this subject, is I recently had a veteran that came to us saying, hey, I'm getting a $25,000 grant from the city. I'll leave the city out of it. Like, you can use it with your VA home loan. We've done it before. No issues. We have it in writing. Comes down to it, we're a week from closing. VA comes back and says, you can't use this program. So client actually knows these people at this program, and they're like, oh yes, we've offered it to VA loan buyers, but we don't know if it actually can be used with the VA loan. And they weren't able to utilize that $25,000, which is, I think, crazy. But this is why we do it, because you got to read the fine print. So I'm going to show you how to get to that fine print. Now, let's start with the positive piece of these down payment assistance programs, because for people, it definitely makes an impact to be able to purchase a property, because closing costs and or down payment can be covered, or at least a portion of it, and in times all of it, because closing costs vary across the country, along with using your VA home loan. So, for an example, if you do 100% financing, no down payment, plus your closing costs are covered by a grant or a community second mortgage, there's plenty of different names for that, that allows you to purchase a property. Now, I'm not going to talk about the negatives just yet with that, right? But it opens that door. Now, some programs also are straight up free money, right? They give it to you with no restrictions at all. I haven't come across those, but I know like client facing wise, like, hey, we're utilizing a program. I've definitely have run into them when I do my research, but then it just comes down to these restrictions. And a lot of people will come to us saying like, hey, I found this program, I want to use it. And they're basing this not down payment assistance program to help cover those closing costs to make that dream work. But again, you got to really understand where those restrictions come from. And it's actually up to you to understand it, because a lot of times lenders don't know these programs, just to be honest with you, because unless you actually specialize in these types of programs, which there's very far and few of people that do specialize in them, you can get in a situation where you think you're going to be closing on a property, you spend all this money like for home inspection, and it doesn't happen. That's why it's so important for you. So I'm going to kind of go through some of the restrictions and pros and cons of these things. And if you guys have questions, please drop them down in the comment section. If you've tried to go through these, share what resources you have. These videos are designed for people across the country. So sometimes there'll be a restriction on the type of loan that you can get. So it'd be like conventional, FHA, and VA are really the most common ones that we see. Sometimes we'll see USDA, but there's no really other programs. Like if you're trying to buy $1 million property, more than likely you're not getting any type of assistance. Okay, let's say, and I'm kind of build on this, right? So let's say you qualify for one of these based on the programs that we talked about. So you know what, you're using a VA loan. Yes, you can use it based on that. Now the next part is going to be the type of approval that you do. Is it an automated approval or an manual underwrite? We just did a video about this. That's going to have an impact on if you can use your VA loan. Like, is it an automated? Yes, you can use it. Is it a manual? You may not. They may also have debt to income. Actually, most of them have debt to income restrictions. So for example, with a VA home loan, you could do a 60% debt to income ratio because they look primarily at residual. So you can meet the automated approval, you can meet the program itself, but then because your DTI doesn't fit that, and it's also going to be based on property, right? Because some properties have higher taxes than lowers, you might qualify for some and not others, right? So let's just say you're good to go with the income, you have the automated approval, and you have your VA loan. The other layer to that is they may have a credit score restriction. So a lot of times programs will have like a 640, 660, what is typically what we see. So you can have a 620 credit score, still meet the income requirements, DTI, and have an automated approval, but you may not qualify because your credit score is too low. That's why you want to know what that credit threshold is. Another part of these programs is going to be based on where you're buying, like the geographical area. It could be down to the zip code. It could be down to the street address. Sometimes, like if you buy within these streets, you get additional perks. Again, it's definitely worth finding out if you can do that. And then the one of the other trickiest parts is that funds available for the program, depending on when their fiscal year is, you might be going into like being pre-approved, thinking you're going to use this money, you go under contract, and then all of a sudden find out that the program has run out of funds, and basically you kind of up the creek without a paddle in that sense. So just be really careful. And on top of that, that's why a lender that knows and does these a lot is going to be your best bet, because like they will be on top of it. They'll notify you of what's happening with that piece. And then also sometimes you can qualify for multiple programs, but you can only pick one. So definitely know the ins and outs of that part. Now we're going to talk about so that's restrictions of the programs themselves. Now we're going to talk about restrictions on the money. This is where people kind of get caught up, and this is where the debate starts happening. And I'm going to go through some examples of that. Prepayment penalties on VA home loans are not legal. You can't do them. In fact, you can't even do them on any type of primary residence. You can't do them on investment properties, but you can't do them on primary residences, okay? VA loan especially, no prepayment penalties. So that exists for a reason. Government entities have figured out that they can do prepayment penalties on the portion of money that they've given you. So, for example, if they give you $10,000 today, right, and they may have a clause in there that says that if you sell or refinance in 3 years, 5 years, or 10 years, you might have to pay a prorated amount back to the entity in order to be able to refinance out of that and get rid of that second mortgage. Most of the time, there's a second mortgage, and people don't realize that, but it gets tagged on at that time. Those restrictions, right? If you refinance, if you sell, all of that, you'll be triggered this fee to be paid, which is basically you paying a portion of the money that you gave back. This is the crazy part. Most of the time, the rates are higher on these programs for a reason, because they want to make their money back instantly and then give you a loan and basically let you know like they're helping you to do that. Most of the time, a lender can do the same thing. They can give you a credit and give you a little bit higher interest rate, and you can utilize that money without any of the restrictions, okay? That restriction alone depending on where rates are. Like if they're at, let's say 2.25, where they were a couple years ago, oh yeah, all day long, this program makes sense, hands down. In a higher rate environment, whether 7.5, would I do it? No, because if I want to refinance down to a 5.5, I mean, rates are going to be, they're cyclical. They go up and down. They're going to drop at some point. It's going to happen. Everyone's going to want to refinance. But if you have this, you won't be able to refinance. Or you will be able to, but at a crazy penalties. And since you have to pay that money back, it counts against your recoupment period. So now you may not be able to be eligible to do that, even though you're going to be saving a ton of money. It just causes a lot of issues. Again, this is why it's so based on each person's financial position and do you really need the money or not, okay? Now, let's go through a little bit on how to search these properties. So I'm going to pull it up here in a second so we could take a look at it. And then you guys can kind of see. So basically, any places you go to, you want to be able to look up, like, let's just say if you're in Tampa, Florida, down payment assistance programs, right? And it's going to take you to the city of Tampa. And so now you'll see they have a couple different one of these programs that you can get into. Dare to own the dream, right? So they'll talk about all the different programs that they have for Tampa, right? All the different assistance programs they have. Depending on your area median income, they can give you a certain amount of money to purchase a property. This is very important to understand. And here it says fully forgivable after 10 years, assuming still owner occupied. So that's just some of the stuff that I talked about. See here, they have a debt ratio of 36.43, which, by the way, most people are above that. They are hands down above that amount. And here, that's actually pretty good that they have a credit score of 600. And this is for purchases price up to $350,000. So you start seeing all these restrictions where you're like in an area where, let's say the median price is $400,000 for a house across the country. Now you're factoring these additional ratios, which, a lot of times if you're not using a VA home loan, then you are not able, you have to pay private mortgage insurance. See, it says other types of including fully and fixed and fully amortized products, FHA, VA, and VA conventional loans are allowed. ARMs are not allowed. So again, that's just like a restriction of that program, right? So then, let's look at that next tab that popped up. Now you're going to see different counties offer different programs you can use for down payment assistance. So you got to just be able to go in and click it and take a look at it. Oh, this one doesn't even work. So let's just hope we can get one of these to populate. You can see it. Yeah, so you're going to have to be able to call the county and take a look and see what it is, because it really is going to be driven by the state. You can call the state and ask them questions. A lot of times they're going to have their approved lenders on there as well, so you can kind of reach out to them so they can walk you through that program. If you guys have questions, drop them down in the comment section. Make sure you hit the like and subscribe button to get more content like this, and I'll catch you guys soon.